If you've watched previous videos, you know I typically love to give tours of area communities. However, today we're going to shift gears and we're going to talk about something that I get asked all the time. And that question is now the right time to buy or sell? Are we going to have a market crash? So let's tackle that now. So that's actually a really easy question for me to answer. And the answer is, I don't know. I don't have a crystal ball, but I do have a computer and I have internet connection and I have the expertise in the industry. So we're going to look at some historic data and we're going to talk about what happened in the crash of 2007-8 and why we are not under the same conditions as we were in back then. So we're going to look at some patterns and we're basically going to go back in time and I'm going to break it down for you where we're at now, where we were then, and how they are completely different. So brief history lesson. Back in 2004, 5, 6, when the market was going wild, part of that was because a lot of people could suddenly afford to buy a house. Even though housing prices were going up, lending was so loose and easy that just about anybody could get a house, me included back in 2001. So what happened was all of a sudden there were buyers that could flood the market, and because there were so many buyers, housing prices went up. However, the reason why there were so many buyers was because of subprime mortgage lending, which basically means that more people were qualified for a loan when they probably shouldn't have been, maybe me included in 2001. And that was because they had bad credit or they didn't have sufficient income. Now in today's market, they wouldn't get a loan, or they would get a loan, but it would be a much more strict type of loan. Back then, they were throwing loans out to just about everybody. So that set us up for a disaster, which eventually happened. So a lot of these subprime loans were actually adjustable rate mortgages, which was all good and dandy when prices were going up and people had a lot of equity back in 2004, 2005, 2006. However, when the market started to turn, all of a sudden these people were losing their equity, and at the same time their mortgage rates were going up. So their homes were actually becoming less affordable. The big issue, and honestly the biggest difference between now and then, aside from the fact that lending has really tightened up since then, is the fact that inventory back in those years was really high. So there was already a lot of inventory before the crash. Now we actually have had very low inventory historically for the past few years, and that is keeping things in check. So through the crash, inventory stayed relatively high because all of a sudden so many of the people were underwater on their house. And even though inventory was kind of high before the crash, now some people had to sell their homes. And there was a flood of homes on the market. A lot of them were foreclosures or short sales. You probably remember. Now we have people who are in their homes, generally speaking, with good credit. Credit is so much healthier right now than it was then. So we have a much healthier credit situation. A lot of people are in their homes with low mortgage rates. Interest rates really started to kind of tick down after the crash, a little bit high, a little bit low along the way, but generally speaking, they really trended downward. And that downward trend have put people in a good situation. Prices were low when they were buying and their mortgage rates were lower when they were buying. So they're in a healthy housing situation. Adding on to that is the fact that for most of the period after the crash, or at least, once the recovery started, jobless claims stayed relatively okay. I mean, they spiked during COVID. Jobless claims shot way up, but then they went back down again. And the reason I mention jobless claims is because while people have a job, generally speaking, they're not selling their home out of desperation. They're selling their home because they want to move or they want to upgrade or they want to try something different. So most people now, unless they're moving for a particular reason out of a want, they typically are not going to sell their home. And they're sitting on a decent mortgage rate, a lot of these folks. So what happened that caused the pricing increase over the last couple of years when we got really ridiculous during the COVID years? Well, we were already on a steady incline from our recovery from the crash. We gradually started to go up, a really, really healthy recovery. When COVID hit, all of a sudden we saw housing prices go up, and that's because inventory plummeted. Inventory is really one of the key things in keeping our recovery steady. And there are a lot of factors as to why inventory has stayed low. And this is nationally, relatively speaking, inventory is low. But one of the big reasons why inventory has stayed low is because interest rates have gotten higher. Housing prices have, for the most part, held steady. We've not seen any major dips nationally as an average. And because people are in their homes at a generally lower interest rate than what they're going to get now, unless they absolutely have to sell, which there are plenty of people who are still going to sell, you're not going to see a flood of homes on the market. People are sitting in a good position in their home. Add on to that there are a lot of investors that jumped into the market, and those investors, whether they're large investors or the small investors, the investors are not selling. As a matter of fact, a lot of the investors I've talked to are holding onto their money and getting ready to jump back into the market if prices start to decline a little bit more. So once interest rates start to go down, and they will, interest rates are going to start to decline at some point. Is it going to be the end of this year or the beginning of next year? Not sure. But when interest rates go down, it's going to open up a buying market again even more. When that happens, you don't see prices go down. As more buyers come into a market, typically prices go up. So are we going to see a big drop in prices? I don't see how that's going to happen unless inventory goes up. But when inventory goes up, it's going to bring out the investors again. So I think we're still looking at hopefully a healthy recovery. We may have some kind of a recession, but I don't think it's going to be led by the housing market. Let me insert one other factor keeping inventory low, and that was the supply chain issue during the COVID pandemic. Now, supply chain has basically resolved, or certainly gotten a lot better, at least in the housing sector. In that time period, there was a big demand for housing, but at the same time, low inventory. So builders couldn't really build them fast enough because of the supply chain issues. Now, if the supply chain issues weren't a variable, I think we would be sitting in a different situation. But because of the supply chain constraints, builders really couldn't build fast enough. And we don't have a big flood of builder inventory right now. So that has kind of kept us in a healthier situation. One final note, and that is addressing foreclosures, because I do get some people that say, oh, wait till the flood of foreclosures hits. And I think they're just reminiscing a little bit about the crash. Before the crash hit, in 2007, we already had a decent amount of foreclosures. The foreclosure rate was much, much, much higher than it is right now. And that was before the crash. During the crash, obviously, it was ridiculous, and immediately afterwards. But right now, foreclosures are still relatively low. And that's part of the reason is jobless rate is still relatively low. So I think if we start to see the jobless rate go up, which is kind of happening right now. Once the jobless rate starts to go up even more, I think we're going to see some interest rates start to come down, and that's going to kind of kick in the cycle I mentioned earlier. So I hope you found this video helpful. I do want to say I am not a financial advisor. I am not psychic, although I did win a small lottery once and a really solid bingo pot. But aside from that, I am just doing what everybody else is doing. I'm looking at the data, connecting the dots, finding patterns, and giving that information to you to use as you see fit. If you have any questions, don't forget to comment below. Give me an idea for a video, something that you find would be helpful. Don't forget to like and subscribe. I hope to see you in the next video.
For more information about our real estate services, visit www.pointsouthflorida.com.